Good afternoon, good evening. All right, hi everybody. It's 4:59. I always start these on time. Hey Christina, hi everybody. We pretty much end on time, 1 hour typically for these. This is slightly different. I'm not calling it the usual DTS educational event. This is actually kind of more of a training event. It was something I was going to do for the trading room, and then I figured, well, let's invite everybody who was ever in the trading room. And then I said, well, why not everybody? It's just, some tips and tricks and stuff. Again, I teach everything on the free stuff page except the actual technical analysis stuff. And this is not the actual technical analysis stuff. This is everything but that. So I thought it'd be a good topic. We could all get together. Should be a very educational section. This is specifically for day trading, all the examples. A lot of the concepts, of course, do apply to longer term, but some of them will not, of course. You're talking about entering a trade first thing in the morning. Well, that's typically not a concept you're worried about when you are long-term trading or investing. So Thursday, June 9th, training event for DTS members, tips on day trading organization. Here's a checklist of the things that I'm going to go over, the things that I have prepared in these slides. I brought everything to slides. I just find it's easier to have it pre-prepared rather than trying to hop around on charts because it's very disorganized when I do that, so it's all prepared. It takes me a little extra time, but I think it's much clearer for all of you that are listening. What we're going to talk about, this checklist right here, the difference between daily chart setups and hourly chart setups when day trading. I think that's an important topic. That is a little bit more of a actual, technical one, a chart reading one, but I want to bring that up because part of the issue here to stay organized is to know what you're looking at all the time. I always want to emphasize, most of you have been in a trading room with me probably. I'm not one to ever try to say that day trading is about speed or being fast or that type of thing. We have people in the trading room that are, everything from grandmothers to retired to, whatever. I don't think you need to be fast, like it's not one of the skills required. However, organization is what's really key, but it is true when it's time to take a trade, you can't be fumbling around. I mean, you can't take 12 minutes to figure out how to load your order execution or something. So you will find that if you think that you are maybe not super fast at working with the mouse or whatever, it shouldn't really matter because if you're organized, all you have to do is just, when you decide to say go, you hit one button and you're good to go. That's what I want to show you today. So thumbnails are needed. Your watch lists are worthless once the market is open. Thumbnails are key to being able to follow things. We're going to talk about the 30-minute rule, how to set up your screen, how much and when you should be trading as a day trader, how to set up order entry, generic, meaning not trade specific, but I get the question a lot. How can you watch 5 or 6 things, the opening 5 minutes, and then get into one that quickly? I'll show you how you do that. Volume and tradability is key, and pre-market chart use, and much more. You know what? When you have a real long list of things, and then you put much more, yeah, usually means there is nothing else. So you just throw in much more. Come join us. So that was kind of a joke there. It should not matter. If you are new to trading or not, you should be focused on what matters and able to enter trades when you want to. While this is using day trading examples, many concepts do apply to long-term investing, and well, in terms of being organized and everything at least. This is not about what to trade for the most part. It's about how to trade what you want to trade. So I'm not here to tell you the strategic concepts today, as you know. I don't care if you use the double Heimlich strategy with a crossover with inverted volume refraction as your strategy. That's fine. The question is, how do you stay organized and get into the things you want to get into as a day trader? Also, for some of you who have not traded with me, I'm not a hyper day trader. I like to take 3 trades a day. I usually take between 2 and 5. Pretty much it's the range that I'm in. And they're kind of spread out for me. I like the opening hour. I do almost all my trading the opening hour. 95% of my trades are by 11 o'clock. Maybe this last couple months, couple extra trades at lunchtime, but I leave the screen. What time, guys? 10:30 on average. 10:45, I leave the screen. I come back to check on things at lunch, and on some days I'll announce that I'll be coming back to look for a position at lunch if I think something's going to happen, and that's what I do. So I like kind of a laid-back style, so to speak. At least I think it's laid back, but yet you do have to be on top of things. All right, first slide of what we're talking about tonight. Watch lists for day trading that might help. I have 3 watch lists I prepare for the day. I go through a list of daily charts, first of all. I scan the universe of daily charts every night. These can be swing ideas, but naturally many of them are good day trading ideas as well because of that higher picture of power concept. In other words, if you're in a really strong uptrend or downtrend on the daily chart, you might catch the right moment intraday to take advantage of that, right? But many won't be right for day trading. You won't know until you see the intraday chart. So when I scan my daily charts, I'm only scanning daily charts. I'm not looking at everything at once. Now, this is a matter of my personal preference. This is not a rule. You can do whatever you want. But if you scan on your normal trading platform, like whatever you use, it goes very slowly. It's not terribly quick. So I look at a bunch of daily charts on a separate program called TC2000. I go very, very quickly through them. The daily charts I look at, I do by a scan, and I end up looking at about 800 to 1,000 charts every night. That scan is just simply volume and price. It's like over 800,000 shares a day and over $2.50 a share, something like that. And I remove the ETFs. So I just go through those manually. Now, sure, some people set up scans and that, but I don't do that. I don't really like that. I go through and look at them all manually. And from my daily chart scan, I'll probably pick out anywhere from 6 to 20 stocks. And then I'll put that on a list, daily bullish and daily bearish. You'll see it in a minute. Then I go through and I look at 300 hourly charts. Now these 300 hourly charts are not done by a scan. They are a set list that I change every 6 weeks or so. It starts off being the 300 highest volume stocks in the market. The reason that is because I want a good base of stocks that are going to be very tradable that opening hour. The problem with some of the daily charts, if you dip down lower in volume, like a daily chart that does a million shares a day, may be okay to trade, a little later in the morning if you're only taking 500 or 1,000 shares, but you're not going to get 2,000 or 3,000 shares at 9:35 in the morning. So I want the main things I have on the screen early to be things that have enough volume that I know they will be tradable, meaning I can get the shares that I want. So that's what it means when it says here you want to focus on higher volume stocks. You need to be able to trade these early if you do trade early. Now, naturally, your own personal preferences may come in here. I perfectly advocate somebody who sleeps till 9:30 Eastern time. Any time I say, by the way, is always Eastern time when the market's open. So market opens at 9:30. For all I'm concerned, I'm perfectly fine with somebody who wants to sleep till 9:30, get up and make their coffee, pull up a chair at 10 o'clock in the morning and start trading. That's a perfectly good way to do it. My big thing is though, you just have to be focused and also pick your time that you like. Pick a couple, 3 hours every day. Don't sit there all day. It's not good to sit there all day. I use a list of 300 stocks. It's a static list, highest volume. I stay away from ADRs. Okay. And then gappers is the third thing. Now the gap list is something that you can't really prepare ahead of time. The daily charts, hourly charts you can do as soon as the market closes. Right now you could be doing your prep for tomorrow. And by the way, all that prep I just described so far takes me about 20 minutes. 20 to 30, depending upon if I'm watching TV while I'm doing it or not. So it's not like a big job. And if you're newer, it may sound like a bigger job. You know what? To start with, just cut back on your stuff. You don't have to do all that. Look at a couple hundred daily charts, look at 50 hourly charts, whatever it is. I just kind of believe the more you expand the funnel, if you will, at the top, the better the chance something good will filter through on the bottom. I started looking at a certain number of stocks, and I just kind of believe that by the time you're done looking and, eliminating things, the more you put in the top, the better chance you get something good out of the bottom, right? That's all it is. So the gapping stocks, though, you can't do until the morning that you're about to trade. Gappers are a special category. They're kind of unique. I also look at both what I call full-size gappers, those bigger gappers you see when stocks do earnings and that kind of thing, and also what I call mini gappers. So those you can start looking at 8 o'clock in the morning, about an hour and a half before open, and that becomes another list. Now, why am I doing all this? Why am I talking about these lists? Because this is the first step in being organized. You can't pull your chair up to the market and just come unprepared. You just can't do that. That's what I call watching TV. You can't just pull up and just sit and wait for something to attract your attention. When something attracts your attention, it's gone. I believe that you don't come to the screen and react to what you see. You anticipate what's going to happen. Now, there's a fine line there between what's right and wrong. You have to know what you're doing a little bit. But I always say you have to make the stocks come to you. You have to demand the entry that you want to see and only play with the stocks that do what you want them to do. You can't go chasing things. You can't sit there and say, oh, there's a stock breaking over yesterday's high, right? it's too late. I want to get in at the bottom of that move, not where people are selling already. So you have to be organized like this and know exactly what you want to do. It's no point in having something on the screen you cannot trade at that time. It just distracts you. Now, it said there on daily charts that some may not be right for day trade. In other words, if I see a chart like that, I may flag that daily chart. I may save it and say, hey, that's interesting. And I don't want to get into the quality of the daily chart. I just want to find an example of something. So here you have this kind of, engulfing little green bar from the prior day, whatever it is. Whatever it is that attracts you to you, it may be a good daily chart and it may be a good swing trade. But that doesn't mean it's going to be a good day trade. Here's what that chart right here, and I'm talking about, of course, what happened here was maybe a little bearish, whatever. But what that looked like on the intraday chart was like this. There's that hourly move down. So what you end up with on the intraday chart is a lot of bars down into support. So I wouldn't want to even include that in my day trading concept. Right now, again, you may do some swing trading and maybe you like to save that for a swing trade. But the day trades, the daily charts I look at for day trading are ones that I am looking to have set up better. Now, that same daily chart may have had a different intraday setup. In other words, let me just go to the next chart. The 15-minute chart just shows you a better example a little bit. Not all good daily setups are good hourly setups. Here's the hourly chart for the same thing. You can see it's just a little bit better, right? I don't want to be trading something that just kind of free fell onto support and then hope it goes lower. Now, some of you may be saying, now let me ask you the question. Well, what if this did go lower? What if, Paul, the next day you have kind of a little base here? What if you went below that? Would that make that a good trade, everybody? Would that make that a good trade now? Yeah, no, that's what gives you that very high failure rate. Not on weakness in that case. I don't care if it's weakness or strength, that gives you a high failure rate. Now, it may work. Certainly, you can show me chart examples where you said, hey, wow, I kind of an extended pattern. I took it, it kept dropping, sure. But also for all of you that it takes something like on a quote unquote breakdown and it doesn't work, it snaps right back in your face. Well, this is one of the reasons why, right? So you want to watch out for these. So it's a lower odds type of thing. It may go below that in the morning, but a general rule I have day trading is anything that had an all day drop the prior day, I'm not shorting without a rally back or before 10:30, right? That's just a good rule to follow because it keeps you safe all the time. Now, why save that daily chart? Well, the reason is because it could have been a pattern like this. It could have free fell the day before the opening hour and then gone sideways all day, right? That's a different pattern. So then I would love that combination of the daily and hourly chart. Okay, so you got to look at both of those. Now, the reason I mention this is because if you have the most favorite daily chart in the world, but yet you've decided you can't trade it the opening hour, why do you have it on the screen, right? All times are Eastern time. There is no other time on the planet when we're trading. New York Stock Exchange open 9:30 to 4. That's one of the things, and again, from just what I find from trying to help people who struggle with this, is that they have stuff on the screen that they can't trade. That they can't trade at that time. If you're not going to trade this, if you want to trade the opening hour, and you have something on your screen that you've admitted you can't trade until noon, why is it on your screen? It's just going to conflict and confuse you. Okay, so moving on here. All right, so here's the watch list that I have, and I mentioned daily charts, hourly charts, gappers. So here's all my lists. So when I take all those daily charts and I go through and flag them all, I'll take one more peek at them when I put them on my trading screen, and then I save them here. So right there, there's daily bullish. It says right there, daily bullish and daily bearish. So this goes on my main platform now. So these are all set for the next day. That's a bigger list. That's all the possible daily bullish charts, all the possible daily bearish charts. And theoretically, I'm doing this, the night before, right after close, the day before. Maybe I do it in the morning, but I pretend it's the night before. And then those hourly charts go right here for me. Now, again, I don't care how you get organized. I'm not here to tell you what lists go where. I'm just saying be this organized. There's the hourly charts. So I go through the list of hourly charts. There they are. In the morning, I go through the gappers. Here's the gappers. Gap up, gap down. Okay. This is just miscellaneous markets and stuff. So that just stays there every day. And this is the hot list. So what I do then in the morning, and I do this with the trading room, is before I do the hot list, I have all these other lists here. And then we go through them together, right guys? We go through them together. Sometimes I'll go through some of them ahead of time so we have a little boost in speed there. And my favorites of the daily charts. Now, why would I not know that the night before? Well, because other things come into play. Where's the market opening? What's my bias for the day? Do I have an aggressive bias or a laid back bias? In other words, what's the plan for the day? Some days the plan And this is part of what you have to do too to be organized and effective day trading is what's your plan for the day. As a matter of fact, I started an email to go to all you guys, a little educational lesson about a couple days from last week, where to me the plan is so critical. If the market free fell into close the next day, right, and we're in a downtrend, that gets, what kind of bias would I have that morning then? Here's our daybreak. If we had kind of like what happened today. If we have kind of a free fall into close, yeah, what's the bias going to be in the morning? Is it going to be a bullish, bearish, laid back, or aggressive? And by laid back, I mean, do we wait till 10:30? Do we try and take trades right at the open? What do we do? Right, very laid back, right, very laid back. Why? Because if you start, now, again, I'm not telling you that stocks can't fall the next morning. Of course they can. But the odds are you got a little head fake lower for 5 minutes and you come rolling back. So I want to wait for this area up in here. But conversely, if we were in a downtrend and we kind of came back into close like this, and then boom, we did something like that or gapped down a little bit, now I'd have a very aggressive posture the next morning. So you have to take all this into consideration. Am I bullish? Am I bearish? Am I aggressive? Am I laid back? What's the market bias? What's the timing? And then when I go through these lists in the morning, I have a better feel for what I want to do. Does that make sense to everybody so far? So you have all these lists, and then as I go through and I create this hot list. Now, what's the hot list by definition? It's the things that I'm able to or want to trade in the upcoming half hour to hour. Okay. Now, again, I'm kind of slanting this toward what I like to do, which is trade the open. However, it doesn't matter. If you wake up at 10 o'clock and start trading at 10:30, perfectly fine with me. But again, you still are going to have things that are going to be your prime targets for the next 30 to 60 minutes, right? You can leave it on the list. You don't have to clean up these lists. These lists, perfectly fine to keep all that stuff on there that you want, but don't put them on your charts, which is what we're going to look at next year. These setups are wherever you look at strategically. Again, so some of you may be thinking, well, Paul, what's on the daily list? What's on the hourly list? Well, those are the setups that I like, and they should be the setups that you like. That comes from your education, whether you're self-taught or learned the Zumbali method or whatever you did, that's what you like, whatever it is. All right, so I then take these watch lists, right? And now is when it kind of comes together. So some of these I got from looking at the daily charts, some I got from the hourly charts. When I look at the hourly charts, I kind of look at the daily chart at the same time. So now I take these and I go through them in the morning to find my hot list. And now I look through the 4 key time frames that matter. For day trading, that's the daily chart, hourly chart, and then a 5 or 15. I think I put the 1 and 15 here, but it'd be a 5 and a 15. You wouldn't have a 1-minute chart for evaluating things for the next day. I also keep a weekly chart kind of pinned behind that daily chart. You don't see it there, but just a little tab sticks out. And then I can click on the weekly if I want to check that for any reference. Generally, I'm not too excited about the weekly for day trading, but once in a while, it's kind of a tiebreaker for that daily chart, okay? You go through and I look at these, and now I'm taking a look at all my time frames and evaluating exactly what it is I want to do and if any of these symbols make sense or not. And that's when they come onto my hot list, right? Decide if there is a top watch. And then also when you're deciding this, you also decide what it is you need to see for entry, okay? What do you need to see for an entry? I mentioned this a second ago. Let's talk about it again. You have a setup, but after you have your setup, you need to have something that makes your decision to want to take it. I don't care how bullish or bearish the stock is, without any exception. There's a certain setup you're going to want to see to take an entry, whatever that is. So now we have to wait for that entry. Now, the problem is where a lot of people get messed up is that this is where they kind of get lost, right? They have these lists all over the place, like here, right? You have all these lists, and then you're clicking on all these symbols all over the place, right? Click, 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 you're way behind. And you're wondering, how do you get into a couple trades the opening 5 minutes of the day when you're looking at all this stuff? Well, that's because once you have these watch lists all set up like this, and once you've made your hot list, you put your hot list onto thumbnails. By the way, nothing I'm teaching today is what I consider rocket science. None of what I'm teaching is what I would something you would say, you're going to walk away and say, wow, that Paul, is he ever smart? Maybe if you come to the seminar program, you think, wow, that Paul's smart. But this is just common sense to me. This is just being organized. So thumbnails are mandatory. Your watch lists are completely meaningless. Let me see what you're typing here. Do you use 15 minutes for thumbs? No, Scotty. What good is a 15-minute thumbnail at 9:31 in the morning? The thumbnails on this platform on TradeStation, one of the nice things about TradeStation that's on some platforms is that I can change all the time frames just clicking on one. They're linked together. So it starts off being a 1 minute time frame. What else am I going to look at 9:30 in the morning, right? See, I've already looked at, remember, when I'm putting stuff on thumbnails, and this is the key thing to remember here, I've already looked at all the time frames and I've already decided I want to go long, blah. I want to go short, blah, right? I already know all that. So now what I want to do is I just want to put it on a thumbnail. Now, in order to understand how to look at a thumbnail, here's what I do for these. Watch lists are worthless once the market opens. Once the market opens, you could just trash the watch list if you wanted to, except you need them later maybe, but for the open, you don't care. So going vertically, that first area, I keep a lighter gray. Those are the hot list charts. Those are the things I'm staring at because those are the ones that I want to get entries on in the next period of time. For me, at the open, it's in the next 30 seconds to 30 minutes. And then backup charts, things that I'm not going to stare at, but if they do X, Y, Z, I could trade them the opening 30 minutes. And then I didn't capture it because there's no need to, but another group of charts that are just what I call back burners. Fun things to look at, maybe later in the day, whatever it is. Sometimes I put things there for what I call educational purpose. And then not only organize vertically, but then organize horizontally. This top row here would be bullish. I want to go long, but long on strength, meaning I would want to go long when it proves strength going higher over something. And I know what that is in my head already. Long on weakness. I want to go long, but if the stock were to have a puke lower. Miscellaneous in the middle. Short on strength. Then the reverse down here. The bottom two rows I want to short. Short on a rally and short on weakness. So what I can do is just glance at these charts and look for what is weak, what's taking out something from the prior day here, what's running into resistance here, and the same thing up here. So at a glance, I can just tell what's going on. That's how I can monitor 5, 10, 15 stocks in the morning and instantly pick something out, okay? You know, Scotty, see, I don't, on these thumbnails, I don't need to see if I'm above or below a base because I've already determined that. Do you understand what I'm saying? And this is what I'm trying to get across. You don't have to, if you're going to stop on everything that moves and reevaluate it, you're going to be very slow. And this is what I mean about you don't have to be fast to be fast. You have to be organized. I already know, Scotty, everything on there, whether it's above or below a base or what I need to, for entry. I don't need to double check. Now, I may put it back in my main system. I may put it back here to take a peek at it if I'm confused. But generally speaking, once I put it on a thumbnail, I know what I want to see, period. I don't even need to look again. I go right from the thumbnail to order entry, okay? And then, of course, while these start off being 1 minute charts, all I do is when the 1 minute chart runs off the scale, I make it a 2 minute chart, and then a 3, and then a 4, and then a 5. I just keep moving up the minutes, you know, so that I can see the prior day. Now this has happened to be captured when it was whatever it was, that 15-minute chart, whatever it is. And yeah, by the afternoon, these are 15-minute charts because that's, you know, what you would see. But in the morning, they'd be 1 minute charts. Let me stop for just a minute and pause. Anybody have any questions about where I am so far? I'm hoping that this is super organized and super understandable. JD, when the 1 minute chart starts to run off the screen, I go to a 2. It's that simple. Again, none of this is rockets. When the daybreak gets more than 3/4 of the way, you know what I mean by the daybreak, JD? When that daybreak gets 3/4 of the way there, I go to the next time frame. That's all. Just so I can see the chart. Again, it's nothing magical. It's nothing about good trading. It's just kind of, you know, common sense. I want to see the chart. Okay. Yes, I actually use 3 and 4 minutes. It doesn't matter. Because again, number one, even for your trade analysis, I've told you guys millions of times, you can use any time frames you want as long as they're spread out. And number two, even if it was critical, David, that you used a 1 and a 5 minute and a 15-minute chart, it doesn't matter because I've already made my trading decisions elsewhere. The thumbnails are just telling me that it's now meeting my entry requirement, whatever that is. That's where the stock is coming to me for an entry, right? Yeah, Frankie, on TradeStation and there's some other platforms you can do that. Yeah, that's one of the nicest features about it. One click. All you do is click here and hit 1 enter, and they all go to 1 minute charts, 5 minute charts, which is really, really nice. Yes. All right, so next of all, thumbnails are mandatory. Boom, 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 right? Organized both ways. So at the end of the pre-market, I'm filled up with charts and I know exactly what I want from everything. Okay. The 30-minute rule, your hot list area should be just the stock patterns you'll be trading now or in the immediate future. If you have something that needs hours to set up, don't even put on the charts. Things that may set up but are not likely, put on back burner or back burner area. So these gray ones are what I call that backup area, okay? So again, it comes back to the 30-minute rule. That's why it's important to have your watch list organized. And then as time goes by and you see your charts, right, everything on here, you want it to do something for you to take the trade, right? So if you're waiting here for a short setup to rally into resistance, right? What if it falls? What if I want something short and this row right here that I'm pointing at, this row right here, I want it to rally into resistance like that one did. That's even a trade from today, I think. I can't read it. What if instead of rallying to resistance, these stocks are falling? What do I do with them? Yeah, either nothing or delete them so they don't distract me, right? Because they're going to start distracting you, right? So what I would typically do is if something here that I wanted to short only on a rally, I may put it over in the back burner area and then delete it from here and leave it blank. And then as time goes on, if I'm still in need for something, I go look at my list again and say, okay, you know what? Here's a few things now that are starting to set up now that it's 10 o'clock or 10:30, right? So did everybody good up to this point? So this is just a pure organization of what are you looking at? How do you look at it? It's not uncommon if somebody asks me how in the world do you get into this stuff? And I have to remind you, I'm running a room, I'm talking, I'm typing for the room and doing my own trades and telling jokes all at the same time. And I'm not a genius, so I figured it out. So you can certainly do it if you want to. A lot of it, I don't think really, folks, it doesn't really come down to speed per se at all. Because again, I don't want to portray day trading as something that needs speed. If for some reason you think that you just are too stressed, whatever, back up a time frame. Again, you can, like I said, you can wake up at 10:30 in the morning and take 15-minute buy setups. There's all kinds of things you can do. But whatever you do, you're always going to be behind the gun if you're unorganized. I don't care if it's 2 in the afternoon. If you're unorganized, you're always going to be chasing things. You have to know the entry you want and just slightly, ever so slightly, anticipate the entry. If you're chasing things, you're losing money. And again, that gets more toward the understanding of charts than it does for what we're doing today. So now the next thing, if you're looking at 4 or 5 or 6 things, and I don't know which one I'm going to get in. Now in the room, what I typically say, those of you in the room, let me make a statement and tell me if you 100% agree. I think I do a really good job of telling you the 4 or 5 or 6 things that I'm interested in, what I needed to do for me to enter, and when I can, approximately what the stop will be, right? So anybody listening can kind of be like, okay, now I can't guarantee the stop, because it's going to change everything, right? And that's what we do every single day. But the question still comes up, well, Paul, if you're looking at 4 things, what do you do when one triggers? All of a sudden, boom, 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 you got to pull up an order entry screen and then type in the symbol and then type stop mark. No, you don't do that, folks. These are all up. Now, every trading platform has different order execution. Every trading platform has multiple ways to execute an order, from the chart, from whatever. But every system I've ever seen has some type of pop-up box, right? And you could put multiple boxes up there. So what you do is you take 4 boxes and you put the 4 top symbols in there and you set them all to be buy or sell short, and you put them all to be stop orders, because that's what you should try and use whenever you can, so you don't have to sit there with your finger on the button, and you put in the estimated share size. So you got those all set up. So all you have to do is you just go, I can't read what symbols these are, you just go, oh, XYZ, oh, you know what, I put 2,000, I can make it 2,500 shares, boom, enter, done. So it takes you like 3 seconds to get an order out. Now, if it's not one of those, now if you end up taking something not one of those 4, well, okay, fine, you got to change the symbol. But at least that gets you a jump, and set up whatever you want, 2 of these, 6 of these, whatever you want to, because you can put up as many as you want. So you set those up, and then you just go boom, boom, boom. It is very helpful to be able to use stop orders. Stop orders allow you to say, well, if I want to short the stock under 25.25, you can set it up ahead of time and not be forced to take it. You set it to execute at 25.24. It's helpful also to be trading liquid stocks. I don't like trading illiquid stocks, because you put a stop order at 9:32 in the morning on an illiquid stock. Because the thing is with a stop order, you're taking it long on strength or short on weakness sometimes, but not always. I mean, even if I'm shorting a rally, I'm still going to say under some number. And that's the thing, is that one of the biggest aids to me to getting order execution proper in terms of not having slippage. I'm coming to that in a slide. Naturally, liquid stocks is key. I mean, if you trade Ford, I don't care if you're trading at 9:30 in the morning, you can buy 10,000 shares and you won't even make the screen blink. But some other stocks, you may not be able to do that early. But if you are shorting a rally, you're going to get filled, right? If you're shorting a nationally recognized breakdown or low of the day, you may be chasing it a little bit. Any questions on that? And again, this is not rocket science. Anybody day trading who's been around more than a month should kind of figure this out to say, hey, here's all these order entry schemes. Why don't I set them up ahead of time, right? Why wait till 9:32 and start chasing this stuff? Set them up, be ready to go, and you hit two buttons and you're done, or type one number and you're done, right? One of the things that amazed me is I don't know why people do this. They set out a limit order, right? Meaning I'm going long, but I don't want to pay more than 25.26, and they don't get filled. And you know what they do? Which just amazes me. They cancel the order immediately. Why would you do that? I don't understand. Why do you cancel? Just let it sit there till you get filled. For some reason, they think they don't want to get the stock coming backwards, which really makes no sense at all to me. All right, questions on this? A couple more quick topics here. Volume and tradability. Don't waste your time looking at symbols you cannot trade. Again, one of the keys to getting into what you want to get into is not be staring at stuff you can never get into. So in the room, guys, how many times have you heard me say a day, right? It's not going to be tradable at the open. I'll put it back burner, right? How many times do I say that a day? Well, we don't necessarily have that every day, but you hear me say that a lot, right? I'm not going to waste my time staring at something when I can see there's a 60-cent spread pre-market and it's a stock that does 500,000 shares. Don't wait. I don't care how much you love it. It doesn't matter. If it's unobtainable, move on to something else, right? Remember, opening 10 minutes can be a little tricky, so stick with higher volume all that you can. Now, when am I forced to not do higher volume? Well, when I'm looking at a gapper, or if I get some daily chart I really love. But again, if you really stick to trying to go long on declines and short on rallies, it will help you a lot with order execution, as well as, in my mind, those are always the best trades. If you want a lot more great information on this topic, I'm sure most of you have seen me recommend these. These are from the DTS free stuff page, and they're in that section called educational topics. And there's a video called Tradability of Stocks and Controlling Slippage that I think are great videos to take a peek at. A lot of good information in there. The videos are so good, I normally never reteach this anywhere. I just say, go watch those videos. There's a free stuff page, and scroll down until you see. And these sections, there's only a handful of videos there. Educational videos on various topics. This one will probably be added there as well, too. Kind of a final comment here. Don't mix up day trading. It's not final. Two topics left. Don't mix up day trading and long-term trading. Why am I putting that in here? Well, it's kind of in this topic. Maybe not. Maybe it's just a last-minute tip here. But I see a lot of people that get perplexed. I think it's important that you maintain two accounts. If you're day trading, you should also have a long-term account. The worst environment for day trading is when the market gaps up and then just goes sideways, right? Gaps up, just goes sideways, or gaps down and just goes sideways. Right? Worst thing in the world for day trading. You're not part of the gap. And what happens to a lot of traders is they feel that they're missing the move, right? You guys ever feel that way? You're day trading, market gapped up a ton, and you're looking around for something. Do you ever feel pressured? Like you probably do. I mean, most people would, right? You feel pressured like you have to get something. Like, oh, everybody's making money today but me. The market gapped up and I'm day trading. Well, that's why it's helpful to have the long-term account to say, wow, you know what? Made some money in the long-term account today, and you're not feeling pressured. Remember, these are two totally different things. Long-term, you're playing that bigger trend of what's going on. You capture the overnight move. You capture earnings sometimes. You get all that good stuff. You get that big move going higher. Day trading, we're just out to earn our income every day. We're long, we're short, we're up, we're down. We don't care what's going on. We do what we need to make our money every day. Could care less. If things are not set up, we don't do anything, right? You can't feel like you're missing out because the market moved without you. We don't care about market moves. We care about finding those special little setups that make us our money, right? And one other topic, pre-market charts. I keep a pre-market chart up before open when looking at gaps. Here's a pre-market chart right here. Pre-market chart, this is just from the screen today. So the market closed there, you can see 1600. So the market closed there yesterday, that's where it closes. This stock had something going on, so there was some post-market activity. From 4 o'clock on, there's a post-market activity. Next, right there is where the pre-market opened today. And here's where the actual market opened. So this whole area from here to here is what they call the after hours activity. All of that is after hours. This is the prior day in a close, and this is today after open. So if you want to, you can keep that pre-market chart there. Now, I like to do that while I'm evaluating the gaps just to kind of visually see where it's opening, right? And naturally, I have to look at that on a daily chart. But I can kind of maybe get a quick little glimpse of the pattern. Did it free fall to here? But I really don't care that much. And I do not keep any pre-market charts on my screen once the market opens. Now, I know a lot of you are going to tell me, oh, they're really important. To me, pre-market charts in VWAP and the VIX and about 8 other things are just terribly overused, abused, and people don't know what they're doing with them. Pre-market charts are worthless once the trading day opens. The levels don't matter. There's no support. There's no resistance. If you don't believe me, prove it to me. And not by sending me one chart where it happened to line up. I've been looking at these for 2 decades, and they just simply don't offer you any information. So again, under the premise of don't waste your time, don't be staring at a pre-market chart. Doesn't help you do anything. They're worthless. Yes, of course, Jamil. I have a rating system for gaps that I created 18 years ago, and have been teaching for a good part of that time. Yeah, gap rating systems became somewhat popular, but yes. So and you do have to do that because gaps are different than regular stock trading. A stock gapping somewhere is different than trading there. And that's why in my classes, there's mastering technical analysis, there's mastering advanced tactics, and there's mastering gaps. It's a separate class. And I think it also earned the right to be a separate class, not only because gaps are different, but because gaps permeate all time frames. You can trade gaps at open the day, well, not all, of course, but I mean gaps, some gaps could be traded at open the day they gap, at 10:30 the day they gap, in the afternoon the day they gap. My favorite time to trade a gap, Jamil, is on day 2 or day 3 after the gap. And they can also be great for long-term entry. So they kind of cover the whole spectrum of trading. And they're usually, I mean, like anything in chart reading, the good ones are good setups. Like most gaps, just like most charts, aren't readable, don't mean anything. But when you get the right ones, they are pretty reliable. Okay? Are there any questions? And I left plenty of time for questions here, so go crazy. The slide I have up there is for those of you who want to day trade and have money, but don't have it liquid and available, and you want to step in and day trade a couple days a week. There's a way you can do that. If you email me, I will show you how. It's through what's called a prop program, where you're trading part of a larger account. You put up a risk deposit. You can be trading in 48 hours, and your money's safe. And there's no hoops to go through. There's no tests. There's no anything. You just do it. I don't do it personally. It's through a place I recommend that I've used for years, and they're 100% highly recommended. Took your gap class at VC a few decades ago, but well, thank you, Jeff. Yes, a few decades ago. Let's not go crazy here. Not a few decades, but it could be close to 2. Yeah. You haven't mentioned your carry. Oh, yeah. Thanks, Jeff. Thanks. You know what? It's kind of a. Let me go back here to the. See, that's why I asked for questions. Good question. I meant to do it here. If you look below my hot list, everybody, there's a kind of an unnamed. Well, you know, it actually does say carry on the top, but if you see it, scroll down right here, so you're not seeing it. Are any of you stock hoarders? Like, in other words, you have a symbol and you just hate to get rid of the symbol because maybe it's going to do something tomorrow? This seems to be a real common problem. Even I have it a little bit. But the problem is if you keep hanging on to all these symbols, then your daily, you know, you get a million symbols you got to go through every day. So the way I solve that is to have kind of an attic, if you will, for stocks, and it's called my carry list. Most of the stocks that gapped, or anything that was a very interesting pattern, but will not be set up for the next day, I put it on a carry list. So maybe you have a gapped up stock, right? Something, whatever, it gapped up, and it was a really bullish gap, but it had a big day up today. So you're not going to trade it tomorrow, right? But you're saying, you know what, in a couple, 3 days, I don't want to lose track of this because maybe it's going to set up again, right? You put it on the carry list. That's what that is, carry list. So it's just a bunch of symbols that I won't be trading tomorrow, but I don't want to lose track of them. And then I just go through and clean that out every couple of days. It's particularly good for gaps because a lot of, like I said, a lot of the gapping stocks I find better to trade day 2 or day 3. Depends what the setup is, totally, right? Last call, any questions? Bring it to an end. All right, buddy, we'll see you tomorrow morning if you're in the trading room.